This is Commissioner Doug Stevenson. The Madison County Insurance Committee meeting will now come to order. Today's date is Thursday, April 16th, 2020, and the time is 10:04 a.m. We are meeting electronically at the Madison County Finance Department, Conference Room 1981 Hollywood Drive, Jackson, Tennessee, with a quorum present. I need a motion to make a determination on the record that meeting electronically is necessary to protect public health, safety, and welfare in light of the coronavirus.
Make a motion to approve.
Do I have a second?
Second.
Thank you. Now what we'd like to do is turn the meeting over to Orma Smith.
Excuse me, Mr. Chairman. Excuse me, you need a roll call vote on that motion.
A roll call vote. Okay, thank you very much, Mr. Maroney. Roll call. Luther Mercer.
Yeah.
Doug Stevenson, yes. Brett Beckham. Brett Beckham.
He's saying yes. I'm going to fix his audio now.
Gary Deaton.
Yes.
Jason Compton.
Yes.
Jay Bush.
Yes.
I believe that's everyone. Thank you. We'd like to let Orma know that it's your time to take over.
Okay, is Sarah there? Do you know if she who or can I sent her the presentation, but I think if you can I guess I can share my screen.
I have it, Orma, if you want me to do that for you.
I don't mind doing it. I just want to make sure I have control of it and can do it.
Control is now granted.
What's that?
You have control. You can share.
Okay. Okay. That's the wrong one. Okay. Let's see here. Zoom. Share screen. Okay. Can everybody see that?
Yes.
Okay. So thanks for everybody for joining the call today. This is our annual renewal meeting, and the discussion outline is in front of you. The first thing we want to do is review the calendar year for 2019. And that's the good news. We had a good year. And then we'll get into the reinsurance renewal. And the outlook for the reinsurance renewal is not great. So we'll go over that. We did make an update on the COVID-19 coverage, and I want to go over that. And then we'll also review the dental and vision renewal as well. 2019 claims review. There's a lot of numbers on this page, but I'll try to walk you through that. So we had a total of the yellow is, as you can see, is the prior period, and that's calendar year 2018. And then the purple is the current period, which is calendar year 2019. So we had a total of $15,845,000 of claims submitted, which is down by almost $2 million. And then you can see there are a lot of things that are excluded from those: duplicate claim submission, ineligible member, information still pending, timely filing, other non-covered charges, medical management reductions, and then subrogation. So that reduces the claims down to $12,648,000. And then we get into the provider savings. And so, as you know, we partner with Blue Cross Blue Shield, and they do several things. They're the administrator, so they pay all the claims, they adjudicate all the claims. They also lend us their network, and so we're a member of their network, and so every employee and dependent that goes to the doctor, they get the Blue Cross discounts. And so that you can see on the savings for the hospital was $3.3 million. Well, now, while that's a lower number, it's not a bad number because it's based on a lower amount of claims. Physician savings, other provider savings, out of state savings on physicians outside of Tennessee is OT. So hospital physician, other providers. So total provider savings of about $6,060,000 or 52%, which is an increase over last year. So those discounts are very good. And then we get into the cost sharing by the employees. So there were a total of $681,000 of deductibles met by our employees. The co-insurance, which is what they pay after the deductible, was $337,000. And then co-payments were $256,000. So total cost sharing was $1,276,000, which represents about 19.4%, which makes this an 80-20 plan, which makes it a silver plan. It's almost a gold plan, but it is a very good plan, with the plan paying 80% and the members paying 20%. This just goes into that a little more granularly. And I have this report. I think I emailed it out to all the commissioners. It's 137 pages long. And so I've tried to pick and choose what I think is pertinent for this meeting. This section goes into just a little more detail, inpatient, outpatient, and physician. And just note that this does not include the pharmacy. When you look at the total provider savings on this page without the out-of-network and pharmacy, you can see that the Blue Cross discount goes up to 57.2%, and I wanted you to see that. Last year it was 59.3%, and so we have asked for some clarification on the inpatient facility discount. You can see that's almost 10% lower this year, and we'll get that to you when they get back with us. Doug, this is your slide. This is the claims for the prior period and the claims for this period based on who had the claims. So we had about $3.4 million in paid claims for employees, about $1.4 million for spouses, which is down $500,000, and then claims for children were $422,000. I'll stop right there. Are there any questions so far? Okay. So the one thing, there's a lot of numbers on this page. What I want to draw your attention to on this is that this is the paid claims by dollar range and the number of claimants. And so this is our current period over here on the right. We had 11 people who had claims of above $100,000. And that totaled $1,826,000 in claims, or 34.4% of the total claims were paid on 11 people. And you might say that's why we have insurance, although when we get to the reinsurance, we can talk further about that. But this is, you can see that the large claims are the one really driving that. This is just a further, a little bit deeper dive into, okay, where are we spending our money? And so this is the prior total paid, current total paid claims. I want you just to look at this column. Can y'all see my arrow, my mouse? Okay. So we spent $1.183 million on inpatient facility, 1.170 outpatient, 147,000 inpatient physician, 214,000 outpatient physician, 821,000 physician office. And then total prescriptions were 1,663,000 for a total of 5.312 total paid claims this year. As I mentioned, we had 11 people who went over $100,000. And as we go through these, you'll see that most of it is cancer. So malignant neoplasm, malignant neoplasm. This non-traumatic is a head injury. Then we have cancer. I looked up in STEMI and I don't remember what it was. We had a heart issue, another malignant neoplasm, multiple sclerosis, inflammatory conditions, chemotherapy, and this in-STEMI. I need to find out what that, I'll go back to that in just a second. Jay, can you look that up for me? Just, I did look it up earlier. But you can see even down here, malignant neoplasm, malignant neoplasm. We have probably over 15 current active cancer cases going on. The other thing I want to draw your attention to is most all of them are still active. We do have one employee who's been terminated, but most all of these are active. So this is just a continuation. We ran this report all the way down to 25,000. And then this is last year's claims, and I won't go through all that with you. So I'll stop right there. Are there any questions about the claims reports?
Yeah, Orma,
Yeah.
question. I mean, in looking at that, we have 11 people that I think it said made up about what, 34% of our claims?
Correct.
What comparatively, how does that look compared to like other places our size? Is that abnormal? Is that normal? Is that below the curve? I mean, can you compare that to anything else?
I'll need to look and see. They do give us a lot of benchmarks. I've got the 134-page report right here in front of me, and let me just see. I wouldn't have it on the screen, but I would say, there's a page I want to get to. I think it's on page 19. Bear with me just a second. Let's see if they have claims in excess. It's not on there, Jason, but I will find out. I would say that it's probably high. I think that typically, and Jay May's my partner's on the call, he can chime in, but I would say that typically what we see is it's more in the 20 to 25% range. So I do think 34% is high. And we've got two really high claimants. And that when we get to the reinsurance conversation, you're going to understand what I'm talking about. But yeah, I think that and we've talked about this in the past. I think that we have a government, it's a government, county government, and, people get a job there and don't leave. And so, I mean, we don't have any turnover. And so I was going to look and see if I have, I've got so much information, parsing it out and giving it to you. But, our average age for this group is higher than the norm. I do know that. And so I think that does lead to it. Any other questions?
Armour, what is our increase over last year?
In claims or cost?
Total cost.
Well, are you talking about the reinsurance increase or just the claims cost?
Just claims cost.
Claims cost was down. So if you go right here, last year the claims were 5.46. And this year the claims were 5.312. So we had a slight decrease. And if you go back, that's, our fund balance is over $2 million for the first time in, I don't know, 2 or 3 years.
Okay, good deal.
That is
Yeah.
good.
Well, it's a good deal now, but hang on. The other thing that is happening right now is the claims for April are going to be, April's going to be the best month we've ever had, I think. I talked to Misty yesterday, and the claims 3 weeks ago were 18,000. Last week we had a credit, and the claims this week were 56,000. People are not going to the doctor, and they're not going to the hospital. They're not having any elective surgeries done. And that's bad news for your county-owned hospital. And I know that they've probably gotten a payment from the federal government, but for our group, we need every dollar we can get going into the next policy year. But yeah, claims were down by about $150,000 last year.
All right.
So now we get to the medical administration. Again, Blue Cross Blue Shield does ask, they do serve as our administrator. They pay all the claims, they issue all the ID cards, they pay all the pharmacies, they negotiate with the doctors. We're currently paying them $42.81. They've offered a renewal at $44.01, and Cobra fee of 65 cents is going to 67. Disease management is going from 218 to 224. Physician now is our telemedicine, which has been very nice to have. Total increase is $1.30 on these services. And I think that I may be able to get those down. I've been working so hard on the reinsurance. I really haven't hammered them on this yet, but I'll get back to you on that. I think we can probably get some of those reduced. They do offer a 3-year contract. But I think that, my take on that right now is when you see the reinsurance renewal, we're probably going to want to just do a 1-year deal because I think we're going to want to have the flexibility of going to the market every year to make sure that we have, the best reinsurance product for you. Any questions on the administrative cost? This is a $5,000 or $6,000, maybe $8,000 increase year over year. All right, this is the Blue Reinsurance is our reinsurance stop loss carrier. And they have asked for a 15.75% increase, and they placed 2 lasers on 2 separate employees, and we'll get into that. But so what I wanted to do is I wanted to go back and show you the partnership that we've had with them since 2012. Before 2012, our reinsurance carrier was H&M, and then Blue Cross Blue Re came into the picture in 2012, and we've been with them ever since. So through current, which was through February of 2019, we have paid a total premium of $4,049,000, and they've paid out $3.358 million, or 83%. However, we have 2 claimants that are over the $100,000 mark, that their claims are about $100,000 a month right now. And so we're going to pay them a little bit more premium between now and July, but the claims are going to go, the claims are projected to be up. And so this 2019 policy year ends June 30th of this year, actually. So that's going to change this to 86%. The loss ratio they're looking for is about 85%. So the last 6 or 7 or 8 years have been good for both parties. I mean, we have paid a fair amount of premium, and they've paid a fair amount of claims. Nobody's, it's not out of whack. It's not a 50% loss ratio, and it's not a 150% loss ratio. Any questions about that? Okay. This is what I received from Blue Cross back in February. I talked to a couple of commissioners, and I talked to Tony and Misty. And so what we decided to do, and I'm just going to read through this, and then I'll tell you the action we took. So the current, we have $100,000 specific deductible, which means that the county pays up to $100,000, and then after that, reinsurance pays. They've asked for a 15% increase on that, and we'll get to those numbers in just a second. They have offered an alternative quote for 125 and 150, which would do away with the rate increase if we went to 125, or lower the rates by 13% if we went to the 150. The specific contract is on a 120/12 contract basis, which means that all the claims for the past 5 years are paid. There's no gap in coverage, and so it's a really good contract. Now, we have an employee who they are going to place a laser of $1.3 million on this employee, and the reason that they're putting the laser on this person is their claims are expected to be $1.25 million this year. And I've got some more detail and we'll get into that, but it is a high cost malignancy. This laser, so basically in self-insurance, a laser is a risk management tool. I can get everything covered, but we're going to have a $1.7 million increase, which, you either pay or you have a laser. The second employee is going to have a $395,000 laser, and this is for an employee who has cystic fibrosis. This employee's medicine is a little over $1,000 a day. Now, I guess maybe Doug and Gary are the only two. We have not had a laser since 2011, which is good news. But again, if you go back to, let me just go down. Here is the quote for the reinsurance. And so you can see that this year we paid, this is the quote. This year we paid 15% less than 822, and I don't have that number exactly, but we paid in the $700,000 range for reinsurance this year. I guess it was 713 if that was flat. The two claimants that we have that are being lasered, their claims are expected to be over $1.6 million just for those two people.
Let me ask you a question on the laser.
Okay.
Can they, what institute, how high is it have to go before they call for a laser? Can they call for one whenever they want to?
Well, they can call for one only at renewal. Typically you don't see them call for a laser if the anticipated claims are $300,000 or less. They just take that as a risk that they're taking to collect this $700,000 in premium. So if you look back this is 2018, our largest claim was $411,000, and there was no laser on that person. They didn't do a laser. So, but I mean, just from a business standpoint, you can expect to collect $822,000 and pay out $1.6 million on two people and cover other 500 employees, over 100,000. So it is a tenuous situation. And I mean, with the COVID-19 and the revenues and everything else, I mean, I understand, where we are. So 2 months ago, we found out about this. I sent you the email out, I guess about 6 weeks ago, letting you know about it. And this is what we did. So the reinsurance market is made up of carriers that you may or may not have heard of, but we basically went to every reinsurance market there is. And this is the result of the quotations that we did. We only asked for A and A plus company rated companies. We didn't want to go to a B plus or a B rated company. And only 3 companies quoted. Everyone else declined to quote because they're uncompetitive. And the quotes that we received from American Fidelity, Anthem, and US Fire are all higher than the Blue Re. And so our plan was to go try to find basically see if there was any reinsurance that would take our case, and either reduce the lasers or reduce the premium. And there aren't. And so I've talked to Tony at length about this, and you know, what we really have is, you know, a situation where we have two people that are potentially going to cost, you know, could cost the county, you know, almost $1.7 million in claims. And then we have everybody else to cover. So as I said, having a good year last year was really important, and then having a really good April. And I think we'll have a good May too, because the claims for April and May are based on, you know, the claims for February and March. And I don't think anybody went to the doctor much in March. We do have 5 employees, I believe, that have been diagnosed with COVID. So that could drive a little bit of cost. But, you know, if you look at the number of, so I want to walk through this math with you right here. Okay. So $822,000, if we go to a $125,000 deductible, we could save $109,000. But if you go back to the large claims for 2019, you can see that we had 1, 2, 3, 4, 5, 6, 7, 8 over 125,000, which is 200,000. Take the 2 out that are going to be on laser, we still have 6. So you're going to pay $150,000 to save $109,000. So I don't think raising the retention is the right move at this point, just simply because of the sheer number of people that we have with large ongoing claims. In addition to the 2 lasers, there were 4 other claimants that are expected to be over 100,000 this year. And then, you know, you just have the risk of you know, the other general population. So I want to stop here and answer questions, because I know that you may have some regarding this situation.
Your recommendation is to stay at 100,000 and take the 15% increase then?
Yeah, I don't think, I mean, you know, there's no reason to save 109 and pay out 150. We know we're going to have 4 others that are going to go over 100.
I make a motion, we take that recommendation.
All right. Orma, one question on the laser though. I mean, because you said they're offering this as a 3-year. If we were to take the 3-year, can they add lasers during that contract to additional people, or are we locked in without them being able to add any additional lasers?
Yeah, I'm sorry, Jason. The 3 years is on the administrative services only.
Okay.
It's not on the.
So they could add lasers whenever they want to, regardless.
Now that there are some contracts out there that's called a no new laser contract, which says that they cannot put any new lasers on there, but then they put a caveat on there that they can raise your overall premium by up to 50%. Well, I mean, you're just horse trading at that point.
Absolutely.
And really, if we'd had a no new laser contract over the last 8 years, we would have paid a lot more than $1 million in extra premium, you know, for that contract. So, I mean, if you look at our history over 10 years, we had 2 lasers, one in 11 and one in 10, and now we've got one in 20. It really is a risk management tool. What we don't want to do is pay $1.6 million more in premium and then come back and say, oh, well, you had a bad year. We want to raise the premium on that too. Now, there are a couple of things that can happen. Number one, these 2 people could go just as forecasted. Okay. And if they do, we're going to spend most of the fund on paying their claims this year. Number 2, they could get better. Number 3, they could get worse and die. Number 4, they could terminate employment and not take COBRA. So there are 3 or 4 different scenarios. I'll tell you the last 2 lasers that I've had, I had a $350,000 laser last year, and the claims were $51,000. And so the laser ended up helping, because if they hadn't had the laser, they would have, you know, charged probably $320,000 more in premium. this one lady is really sick, and her treatment is her cancer treatment, $68,000 a month. So you know, we're looking at probably $700,000 or $800,000 just the ongoing treatment. That's if she continues to take it for the next 15 months. So one other nice thing about this situation, if you can find silver linings, both of these people have already gone over the 100 for this contract year. So we're not paying any more claims on them until July 1st. Okay, so they're covered under the current contract. And if you go back to this screen, you can see that this is showing this is basically the last quarter of this policy year. We're going to pay in 3 more months of premiums, and they think the claims over the next 3 months are going to almost double from 496 to 912. So hopefully the treatments will work, and the things that they're doing. Thankfully, we're not going to pay any more claims on these people until July 1st.
Before we proceed, can we have a second on Commissioner Deaton's motion, please?
I'll second that.
Thank you.
Roll call.
Do we have any more discussion? We'll have a roll call now. All in favor, Luther Mercer?
Yes.
Doug Stevenson, yes. Brett Beckham? Gary Deaton?
Yes.
Got that. Jason Compton?
Yes.
Aaron Ellison? Aaron Ellison?
Yes.
Jay Bush?
Yes.
Okay, thank you.
Okay, any other questions? Well, this will change the scope of our work a little bit this year. I'll report, as I always have, I'll report the claims per month for the whole group. I'll report large claims, but then we'll have a separate reporting on these 2 lasers each month. And even if, you know, if we don't meet for some reason, I'll get those out to you. So we'll want to keep an eye on those and keep an eye on the fund balance. Now, very interesting. I highlighted this. Where did I do with it? The medical suggested funding level from Blue Cross is flat. So they do not think that the cost to insure the other 518 employees is going to increase based on, so basically they're taking the 2 largest risks out of the pool, and they think the rest of the pool is going to run pretty well. Now, they do think that those 4 high claimants could run up the cost of reinsurance, but from a funding standpoint, so what we're talking about is what the county puts in and what the employees put in. They do think that we're funding it at an adequate amount. So, but again, I think that we have things in place with the fund balance that we'll watch it. Hopefully it'll go up by maybe, you know, $400,000 more over the next 2 months with no claims, you know, due to COVID-19. And then we can keep an eye on it. And then we do have some stopgap measures in place that if the fund gets below a certain amount, and I'll have to go back and look at the notes, but I think if it gets below, I want to say $400,000 or $500,000, that we do take action, but we'll know well in advance of that. These claims should be fairly predictable. As you know, the run rate on those 2 claimants should be about $100,000 a month. Any other questions on the medical?
Omer,
Yes.
you said it gets below 400 or 500. It gets below 1.3. We need to start reconsidering.
Okay. I couldn't remember where we took action to add to it, but we can look back in the minutes and make sure that we stay on top of that.
His name is.
You can call me Omar.
Always have it.
Okay. Any other questions? Let's talk about the dental real quick. The self-funded fee is increasing by 11 cents, which is just the administration that Blue Cross charges to fund the dental. The suggested funding level is increasing by 6%. We do have a couple of options on the dental available. Right now, this is our dental plan. We have basically basically an 80, 180, well, really, it's an 80% plan. It pays 80% for exams, x-rays, and cleanings. It pays 80% for basic restorative, and it pays 80% for major. The one thing that we did ask him to do was quote a $1,500 max instead of $1,000 max. And and you can see that would raise the rates from $1,677 to $1,840 to do that. I don't know that this is important. We are seeing a lot of people run out of money at $1,000. We have talked about this the last 2 or 3 years, and you had asked me to bring that option to you. I do think if we change it, we need to change it for everybody. That, it may be that, with the current situation, we want to just keep what we have. Is Tony on the call yet?
No.
Okay. Misty, do you have any input on that?
We haven't changed our dental plan in years, but this may not be the year to do that. So, as anybody knows, if you go to the dentist, $1,000 is not a whole lot, but that's just my opinion.
I did talk to Tony yesterday, and he shared with me that the financial picture for the county based on the coronavirus and sales tax and everything else. And so without employee raises, I don't know that beefing up the dental is it's the right time to do it. But I did want to do my job. You asked me last year to bring you this option, and so that's what I'm doing. Does anyone have a thought or an opinion on the dental?
Where it is.
Okay. I don't think we need any action.
77.
What's that, Mr. Mercer?
I was making a motion that we leave.
Okay.
Second. Commissioner Deaton seconds. Roll call. Luther Mercer.
Yes.
Doug Stevenson, yes. Brett Beckham,
Yes.
Gary Deaton,
Yes.
Jason Compton,
Yes.
Aaron Ellison,
Yes.
Jay Bush.
Yes.
All in favor. Thank you.
Last thing we have to look at is the vision. And again, the last couple of years, we talked about changing the vision plan. The rates are staying the same. There's no rate increase on the vision. You did ask me last year to bring a higher frames allowance. So we have $120 frames allowance right now. We did get 135 and 150. And so you can see that goes from $696 for single to $744 to $792. So it's $1 a month for $30 of extra frames allowance. Again, I don't know that this is the time to change. Misty, I'd like your opinion, and then
I think we look at it again next year.
I agree. Again, when we started working on this, we didn't have COVID-19, and I told Michelle Myers at Blue Cross, that, you know, we had discussed this last year and we wanted to look at it, but I don't think changing, if we don't have to change anything this year, I think it's the right thing to do.
Make a motion, we keep it the same plan.
Do I hear a second?
Second.
Thank you. Roll call. Luther Mercer. Doug Stevenson, yes. Brett Beckham,
Yes.
Gary Deaton,
Yes.
Jason Compton,
Yes.
Aaron Ellison,
Yes.
Jay Bush.
Yes.
Thank you very much.
On the COVID-19, Blue Cross Blue Shield made the decision to waive all member cost sharing, including hospitalizations, but only through May 31st. And so we did make the decision without so the way Blue Cross presented this was, we're going to cover it unless you opt out. And they asked us for a decision like within 3 days, and we didn't have a meeting set. So I got with Tony and the mayor, and they made the decision to not opt out. We could make a decision to opt out now. The cost to treat COVID is expected to be 2% or 0.2% of the cost of the overall cost. Does anyone want to opt out of treating COVID-19 at 100% through May 31st? I think that was a no from Mr. Mercer. Is that correct?
Correct.
Okay. Doug, do we need a motion, or can we just keep what we have?
I don't see we need. Let's go ahead and have a motion on that.
Okay.
Okay, second.
Second.
Commissioner Deaton seconds. Roll call. All in favor of keeping it the same as last year
You're on the COVID-19.
on the COVID-19?
Yeah, we're not going to opt out. So basically, the motion would be to treat COVID-19 at 100% or 0% to employees through May 31st.
Okay, thank you. Thank you. So a yes vote would be to do that. A no vote would be?
Yes vote for them to pay 100%.
A yes vote would be for 100% then. Do I hear Commissioner Mercer?
Yeah.
Doug Stevenson, yes. Brett Beckham,
Yes.
Gary Deaton,
Yes.
Jason Compton,
Yes.
Aaron Ellison,
Yes.
Jay Bush.
Yes.
Thank you.
That's all I have this morning. Does anyone have any questions? And did everyone receive the report I sent out? Does anybody need a copy of this full report?
Orma, I'd like a copy, please.
Okay. Sarah, why don't I do this? I'll resend it to you, and you can send it to the commissioners, and that way everybody will have it.
You got it.
Okay. That's all I have, Doug.
Okay. Thank you, Orma. We have one more thing of business. Mike Winslow needed to make a report.
I'm going to stop the share then.
Good morning, everybody. As you know, Madison County had in the last 2 or 3 weeks some severe weather threats issued by the National Weather Service. And, it looked like it might have been pretty bad. High winds, 2-inch hail, etc. Luckily, Madison County missed the bullet on all of these. So I'm happy to report we have no storm damages, including the airport. Hat tip to Steve Smith. You'll be happy that was reported. So right now we're good on property claims. We still have an occasional traffic incident, hitting a deer or something like that. But as far as major damages, we have none to report. Thank you.
Okay, thank you. Do I hear any other business?
I can make a motion, we join.
Do I hear a second?
Second.
Okay, all in favor to adjourn. I gotta do a roll call. Luther Mercer. Doug Stevenson, yes. Fred Beckham. Gary Deaton.
Yes.
Jason Compton.
Yes.
Aaron Ellison. Jay Bush.
Yes.
Thank you very much.
Thanks, everybody. I'll get with Tony and Mr. Mercer, and hopefully we can meet in person sometime soon.
So much.